So we are having this very special chat with an individual representative of a company which has really been a big value creator or wealth creator for its shareholders. It's been around for almost 5 decades. This is the 50th year of their operations. But in the last decade or two, there has been a seminal change in the way company has been run. And in the last 10, 11 years, it has almost been a 100-bagger of a stock. Well, what happened in those 10 years? If you look at the top line of the group, it went up 4 to 5 times, and in the same proportion, a slightly lesser, the profitability of the group also improved, and there was a lot of significant push from the management side on the way company is being run, high quality talent, technology infusion, and it also benefit from the tailwind, the cycle, the chemical cycle which started to improve. I'm talking about Deepak Nitrite, one of the companies, the most admired companies on the stock market and loved by investors. And I have with me Mr. Mehta, chairman of the company, joining us right now. Mr. Mehta, thank you so much for your time. It's absolute pleasure to be chatting with you. So where should we begin from? I mean, last decade or so has been very meaningful in the way company has scaled up and the way it got reflected in the form of shareholder returns. I mean, who does more than 50% CAGR returns? One of the rare feats achieved by a company. Talk to us about what were the key ingredients now the company has, and when you look at your vantage point, the learnings of this 10, 15 years, how does it look far out if somebody wants to say hold the stock again for next 10 decades? What do you see the trajectory of the company from here on?
Well, in this last 1 decade, a lot of things have happened. We have learned a lot through competing with China in a number of business segments, particularly in intermediates. These intermediates go for pharma, for agro, for even personal care products. And everywhere, Deepak has been a company which has been delivering performance or goods more like the Europeans would do, but constantly keeping in mind the costs like what the Chinese would do. So it has been more of learning from both ends of the world, trying to be best of both, which has helped us to consistently improve our value proposition. I do remember the focus that we have always kept was on certain key chemical processes, which is to do with, we call them nitration and hydrogenation. And then we get different chemical inputs to do the same process. Wanting to be as competitive as the Chinese, while we kept our focus very, very high on our costs, we also kept on working hard to see what can we do to not to make quality which was unique for every customer, rather than trying to work. When you try to keep costs low, the simple answer is standardize your quality and make it as low as possible. When you want to make your customers happy, you go to customize your quality. What we tried to do was to do both. On one side, customize the quality of our products, and on the other side, work as hard to see that the cost is kept as low as a company which is looking at standardized quality. And over the years, we therefore kept on adding products where our customers would be more discretionary, would be wanting to look at more challenging specifications. Like giving products to the agro intermediate companies was one thing. When we started giving products to companies like L'Oreal in Europe, which was going for personal care, a large number of small things also matter to them. And we decided to ensure that any and every need of our customers is met with. Well, so finally, I think as we took care of these things, performance, commitments from customers, and eventually profits just followed suit. So I wouldn't say that we pursued profits. We pursued to do the right things, and profits came tagged along with it. There has been one approach that Deepak has always kept, which is very different from a lot of chemical companies. In the chemical space, either you are into a commodity space or you are into specialty space. The specialty space focuses on just a few customers and constantly works to see how to meet with their requirements. What Deepak has been doing since the last decade or two is to actually go into the entire value chain. So some part of Deepak is getting to excel itself as a commodity player. Some part of Deepak is wanting to excel itself as a specialty player. And there is a third leg of the stool is the performance product player. What Deepak is trying to do is to keep all the three together under one roof. The benefit is that the specialties, as they keep on growing, there comes a time every few years when commodity prices suddenly go through the roof. Internationally, there is a wild fluctuation. Those are the times Deepak is able to demonstrate resilience, demonstrate that it can ensure that it gives customers a sense of confidence that availability is not going to be disrupted. And in the process, it is able to ensure that its earnings improve. At the same time, its customer relationships improve. Then there are times when commodity prices, if they are going high, specialty businesses may suffer a little bit because you don't pass on all the increases to your customer in the specialty business. Since everything is under one roof, we are able to ensure that our profitability is consistently improving. We will never get into a situation where we have only one big performance quarter and then the second quarter comes down. Because we keep on wanting to play a little safer by ensuring all these businesses are there under one roof at Deepak. So has been one very good strength that Deepak has been able to develop. Look at a building block, as we call it. We don't call it commodity. Look at the building block and go across the value chain. One company worldwide that has been always number one in the chemical space has always been our role model, and that is BASF. And what they do is what they call it as Verboon, where all the products up the value chain, middle chain, and downstream are interconnected like a web. So at the end of the day, because of the web, the strength of the entire value chain is such that unless somebody copies the entire web, he will not be as competitive as you. So this is what has been happening, and having worked on these last many years on the ammonia value chain, getting into various products based on ammonia, nitration, hydrogenation, reduction. In 2018, we added the second building block, which was phenol and acetone. And now are going in the same process of building value chains on these products.
So Mr. Deepak Mehta of Deepak Nitrite is in conversation with us, an extremely rare interview for our viewers. Mr. Mehta, your message to shareholders in your latest annual report talks about very interesting elements of clear focus on margin expansion, widening product mix, and even trying to be as efficient as possible as far as the capital allocation is concerned. Can you give us the thought process where the company is thinking, the direction in which regarding these factors?
So as I mentioned to you, our theme of growth has always been to, one is to really look at a platform where we start making the building blocks. We then look at seeing how to continue to add value and bring in both the skills of a commodity player and a specialty player on the table. And with these in view, we ultimately try to see that we dominate the entire value chain from the building block to the final specialty product, which gives us a unique advantage when we look at competition from abroad. So at the end of the day, the idea is always to see that whatever we do, we are continuing to work to be the most competitive player in the world in that segment, and ensure also that in terms of quality, in terms of customized requirements of customers, we are as close to them as any other specialty chemical producer is. So this basically continues to push us on quality, on consistency, etc.
Right. Sir, up till now the company has been quite phenol tilted, company in terms of the products. But now we understand, or I see that there is a very clear focus on R&D. There is talk of green chemicals, and you wanting to widen your portfolio as well. Talk to us about this value-added products approach which the company wants to take and has also mentioned in their communication. What does the future does look like in terms of value-added products, green chemicals, and widening your portfolio?
See, the approach has been always to see what can we do to bring in platforms which are more complementary to what Deepak is already doing. We were earlier in the field of nitration. We then ended up adding hydrogenation as our competency. Then we added diazotation as our competency. And we then try to look at, okay, what can be one more complementary technology that can make us make 2 and 2 more than 5. At the same time, the idea is also to look at difficult technologies. And in that sense, all of these technologies that we mentioned about hydrogenation, etc., are catalytic based. So we end up working a lot on understanding catalysis and then trying to see what more we can do on catalysis itself. When we add more difficult technologies, like recently we have committed ourselves to add fluorination as a part of our technology package. And then again, the idea, Ajay, would be to see how all these strengths of Deepak merge together. So if we would do fluorination, we would also do the other products, like other processes like nitration, hydrogenation, etc. This makes us very unique in a certain niche business where you need all the strengths under one roof. And that is a position Deepak is constantly looking at, that in the field of specialties, keep on widening by adding the complementary difficult processes and merge them into strengths that Deepak already has. While this is happening on the specialty side, when we are going more into broad basing our business, on the commodity side, we look at identifying a new building block, like we identified phenol and acetone, and then work downstream to see how to keep on bringing more and more value. Finally, keeping in mind what our very long-term customers would be.
Right. You have clearly specified the focus on complex chemistry as a very important part of growth strategy from here on. Talk to us about what kind of conversations you are having with your large clients globally, many for whom you have become a preferred supplier. now there is so much talk of China plus one. How's the demand environment looking? If you could share, because you've come a long way, you have the ability and capability to forecast, if not very precisely or specifically, quite meaningfully, I would say, what is coming ahead in terms of next couple of years. Do you see an era of very reasonable growth on demand side to continue for some time or sustain?
So there are a few good tailwinds that we and India both are going through on the chemical space. One of them has been the disruptions that are taking place in China or as a result of China. It all started with the trade wars between China and United States, and India became an important player in potentially giving products which otherwise China was getting to be more expensive because of large import duties by the Americans. But it soon got into this corona-led situation in which every country actually has gone into a situation where they feel insecure in just relying only on one supplier. That is, and China has been the single largest supplier in the world. Today, China is number one, and it is almost 10 times larger than India. This only shows the amount of potential India has that it can grow to, as people look at sources alternate to China. In this last 1 year, actually, we did believe that the China plus strategy would take off very quickly. But in our interactions with most of the European and American customers, there has been a concern regarding insecurity of their own business predictions because of Corona, that they are not sure how the businesses will be shaping up. Suddenly, there is a short-term huge demand. Suddenly, the demand is not there. So, they have shown willingness to look at India as the alternate source. At the same time, making long-term commitments of capital, be it in India or elsewhere in the world, they have been slow to it because of they themselves not being sure about their marketplaces. The China Plus has also brought in a different way of looking at outsourcing, where they said that even getting it in the home markets, even if it is more expensive, but reliability, dependence is getting to become more critical. Some of the good companies in India have really placed themselves well to be very good long-term partners for bringing products for them. The other issue which we have been sharing with these companies is that if you want to come to India, it's good for you to have a local partner because it makes life easy for you when you are looking at India and other such Asian countries. So I'm very confident that in the long term, there will be more and more multinational companies looking at India, particularly in the chemical space. India is not good in a lot of other areas which relate to, say, electronics, etc.
Strategic tie-ups, you have been conducting business with them for some time now. Are any of these existing players want to improve their relationship with you in the form of strategic tie-up, or some new companies are approaching you to do some very strategic kind of a arrangement, maybe including some kind of equity, so that they have assured business stream for very long period of time? Are you being approached for similar tie-ups? Because many companies in your field are being approached.
As I mentioned to you last, that we had some discussions with some companies. Everybody is a little concerned about what is the long-term future for their businesses. So until and unless the COVID-related issues really settle down in these countries, they are keen to do something, but they are not ready to look at making long-term investments till the time they know their businesses are something that they can predict very well. So it's like a lot of them are taking interest, analyzing, discussing, but when it comes to saying, here is the money, I do feel that they themselves are not sure about their long-term businesses. But so the direction is right. I don't think we should really expect too much too quickly.
Sure. Right. Mr. Mehta, the company Deepak has had explosive growth in last one and a half decade. Going forward in the new decade, do you see the growth will sustain because of the initiatives you are taking on capex, on new products, new clients, all of that? Do you see the momentum continue, or it may just taper off a bit and then continue as a new normal because the company is much more bigger now?
One would always see the business growth over something like 3 to 5 year period. In between, on an annual basis, we would continue to grow more and more on value additions, on specialty products, etc. Every 3 or 4 years, we would go back to looking at how do we make again a major investment that can bring us another platform to grow. So it is like the growth will never stop. There will be waves, as I would say. And at the end of the day, the point would be to see that we don't stop at just one major building block, but we would want to continue to grow into that value chain. So this blend of making building blocks, really helps us to continue growth, sometimes into bringing large volumes, and then most times into bringing more value.
Mr. Mehta, last question. One very reputed fund manager recently made a remark who's seen cycles and among the top 5 domestic funds that the Indian chemical space is poised for sustainable high growth period, and the future Shiv Nadars and Azim Premjis of the world will actually come from chemical sector. That's the size of the opportunity we are staring at, and the way global business setup is also going through a change. But there is also a role of policymakers here to play, and we have seen some steps being taken by the government in that regard. PLI would be some. So what would as an industry representative, as a large player in the country, in the space, the chemical space, would give out some suggestions by which we are able to take that lion's share of global chemical space, which is up there for grabs because of the new way things are developing?
Some of the initiatives that the government is already taking, like the PLI schemes, are certainly good. However, we have been making a case. I'm also chairing FICCI's chemical committee, a national chemical committee. And one of the points we have been saying is that it's important for the government to focus on improving the ecosystem in terms of creating the chemical clusters, etc., so that the infrastructure is set to make any chemical company succeed when it comes to world competition. India is also a peninsular country, and one of the points, therefore, we have said is India needs to invest a lot into ensuring more and more material movement is over water. Ajay, transporting over water, the cost is less than 1/3 as compared to transporting over road, and at the same time brings in a lot of safety. So it means opening a lot of local ports to domestic movement. It means to see that departments such as the customs, etc., are aligning to ensure that free movement of material takes place. When the government looks at all these, it is working to create an ecosystem. Besides, today we still find that the different departments of the government are in silos. Like the petroleum ministry and the chemical ministry need to work closer to each other so that when the whole world is going into O to C, oil to chemicals, we don't want India to lag behind. We want to see how the chemical sector and the oil sector can work closely together to create far greater value addition opportunities. So as of now, these are still like in their own watertight compartments. And hopefully, when the government looks at all of these together, they will bring in a great opportunity. Overall, India, we believe in the next 5 years will literally double its demand for chemicals. Today it is about $160 billion. It should cross 300. How much of it is going to be made from India vis-a-vis how much will be imported, that is to be seen. But if the government does work to create ecosystems, it will certainly make more investments come easily into India. Besides, we have also been insisting that the PLI should find its way to fund more and more of research in India, because number of products that are not into India is largely because technology is not existent, particularly when we talk about bio-based technologies, which are fermentation-based technologies, which are there in China. We all need to invest a lot in research also to bring these technologies in India. So, yes, I do see a great future for India as it grows, as its people's quality of life improves. I cannot compare with the IT world because I know very little about that world. I do know the chemical industry has a great future.
Right. All right, Mr. Mehta, it was such a pleasure chatting with you today, and thank you so much for your time, and we would keep interacting often as much as we can to track the growth journey of Deepak Nitrite in the next decades, few decades as well, the way it has been in the past few decades. Thank you so much for your time.